Hi guys, welcome back. So this is video number 2 from the Northwest Prelim for the year 2023. We've already done adjustment number 1, 2 and 3. We're going to look at number 4, and it reads: the bookkeeper has used the purchases figure of 46,000 in calculating the net profit. Okay, he has neglected to make entries for the consumable stores on hand at the beginning and the end of the financial year. During the financial year, 85% of the packing materials were used. So what they're telling us is that when they were preparing the income statement, they recorded 46,000 as the expense for packing materials. However, there were packing materials on hand at the beginning of the year, and these were not taken into consideration. And this is the packing materials at the beginning of the year that were not taken into consideration. It simply means that the amount that was recorded was incorrect. So if we come to our packing materials, the amount that we were supposed to have recorded should have been the 4,000 at the beginning plus the purchases that we did in this year, that is 46,000. So plus 46,000, and then we will get 50,000. Then we get 50,000 here. Then we are then told of that 50,000, only 85% was used. So we then say, of that 50,000, then we only used 85%. And if you get 85% of the 50,000, you would now get 42,500. 42,500. So what it means is, we recorded 46,000. Yet we were supposed to record 42.5. So we overstated our expense. Once an expense is overstated, it decreases profit. So this expense was overstated by how much? If we get the difference between these two, you get 3,500. So it means we then come here, then we now say plus 3,500, because we had recorded 46,000 instead of 42,500. Okay, now we have to remember that when we have packing materials that have not been used, because we only used 85%, therefore it means the 15% will become consumable stores on hand. So I'm going to come to my inventory. So I can still say the 50,000 multiplied by 15%. The 50,000 multiplied by 15%. Now I want to get my consumable stores on hand, and that will give me 7,500. So I can then come here and say on my inventory plus consumable stores on hand 7,500. There was another way of which you could have got that 7.5. You could have simply said the 50,000 minus the 42.5 which we have here. The 50,000 minus the 42.5. If you say minus 42.5, it would have still given you the 7,500, and you would still be correct. Okay, let's move on to the next adjustment. Now the next adjustment is a rent. We are not going to do this one because I think we've already covered it in the Eastern Cape. We've also done it in the Free State paper. Please check those videos. We've already done that. I think you remember that. When we come to the loan adjustment, this adjustment is a bit different from what we saw in the Eastern Cape and in the Free State. So let's see if we can do this loan adjustment. With this kind of an adjustment, I'll quickly come and open a loan account. So here is my loan account. So I'm just going to come and say loan account. This is a liability, so it's a plus, and here it's a minus. So we're going to have balance at the beginning, balance brought down 1.1 million. Okay, that is the balance at the beginning. And then repayments including interest. So these are the repayments including interest. That is 480,000. And then we are not told interest here, but we're told the closing balance, that is your carry down here, was 800,000. So that therefore becomes my brought down here 800,000. So if I'm to close this off, I'm now going to say 480 plus 800. This gives you 1,280,000. Remember, you did this in your grade 10. You did this in grade 10. 1,280,000. 1,280,000 minus 1.1 million, then it gives me interest of 180,000. So that's my interest, which I'm going to take now to my correct net profit calculation. So I can come here and then I'm going to now say interest. If I'm going to calculate interest, so it's going to be interest. Remember, I've already done the calculation with you. So interest is 180,000. Remember, you need to show calculations. You need to show calculations. So it's going to be 800,000 plus 480,000 minus the 1.1 million. Minus the 1.1 million. Okay. Then you remain with your 180,000 there. And then remember, we are also preparing the statement of financial position. So when we come here, we're now saying the loan was 800,000. However, we have been told that interest has not been capitalized. Sorry, interest capitalized has not been recorded. Interest capitalized has not been recorded. That means I'm coming here, then I'm going to add my interest. Remember how much that was? That was 180,000. Then they tell us that the capital portion of the loan repayments will decrease by 7,000 per month. I saw something like this. I can't remember whether it was the Free State or the Eastern Cape paper, where they decrease or increase the loan. So they can either increase it or decrease it by the rand or by a percent. Please watch out for that. And then here they're saying it's going to decrease by 7,000 per month. So it's 7,000 multiplied by 12. This is going to give you 84,000. So in this previous year, we paid 480, but in the 480, 180 was interest. So if I say 480 minus the 180, that's going to give me 300,000. 300,000 was the loan that we repaid. It's simply the same again. If you say 1.1 minus 800, it was to give you the 300. Of the 300 that we paid last year, we are being told it's going to decrease by 84,000. So we're coming here to say minus 84,000. That's now going to leave us with 216,000. So I'm going to come here now and I'm going to say on my loan, non-current liabilities, in the short term, we're going to be paying 216,000. So I'll come here, then I say minus 216,000. So I'll come in and say current portion of loan, it becomes 216,000. All right, so far we have done about 3 loan adjustments that are different from the Eastern Cape, from the Free State, and as well as from the Northwest. Okay, and then that will then be the loan adjustment in this paper. All right, so I think I'm going to end this video now before I can move on to the next question. The next thing that I would want to encourage you is to practice your statement of financial position. Remember, there are financial indicators that can also be used in the preparation of the statement of financial position. So you need to know where to use your NAV, where to use your current ratio, where to use your acid test ratio, because the examiner can bring some of these financial indicators in the preparation of your statement of financial position. All right, and then yes, I think that would be it. The other way that you could have got this current portion of loan, remember the calculation, we would have said the 300,000 minus the 84,000. Here I'm just showing you calculations. Still, it will give you that same amount. Okay, so in the next video I'm going to look at question number 2, which was the cash flow statement.